Hey, what's going on, guys? This is Terrence Ray, back at you with another stock market update. This one will be a weekly outlook, and we're gonna go over. We're gonna talk about the whole week as a whole, and then I'll be back through the week, with little daily updates. So basically, we're gonna start out. Excuse me. We'll start this show out talking about the expected move for the S&P 500. Now, the previous weeks, the expected move has been like right around 50, high 40s, right around 50 for the week. This week is different. We got an expected move of 76 bucks and 76.27 to be exact. Now, with that being said, that's just telling us that the market is expecting a larger move this week. So we should get more volatility. Vol has expanded. We have a VIX of 16, where before the previous weeks has been, 13, 14. I think that we even got down to close to 12, I think, at one point. Um, so with that being said, basically, no matter what you have in your portfolio, you should expect larger swings than usual. So what that tells you as a trader or investor or whatever, you need to be positioned accordingly to be able to handle larger swings. Whether, i.e., I do think it's almost too late to put hedges in. Your hedges, you need to have hedges in before the move starts. And right now, I think the market is just slowing down. You can see we got, some would call this like a double top right here, almost like an M pattern. So you got a top, pull down and a top. And you had this big red candle down move on, Thursday, and then Friday, kind of got a pullback. And with us expecting, so basically, with us having a larger expected move, that doesn't necessarily mean that, it's bearish. The market could jump up higher, and you get a large move to the upside. It's possible, and continue to trend up. Um, I'm just saying, expect large swings. This may be a good week to actually scalp, like, trade on smaller time frames. You can probably get, large moves on either day in either direction. I'm gonna show you an example. We'll pull up the SPY, and then we're gonna go intraday, and you can see. So this down move right here, this was Thursday, and then the down move that was Thursday, and then Friday you had that. Now, if you ask me, this is like a holding pattern. Like, it's just going sideways, but it's whipping back and forth. I could definitely see I have levels lower on this hourly chart that takes the S&P 500. The next level down would be right around 510. If you're asking me to place a bet, I'm betting that we go lower. Um, I show you the same thing. I have levels on the triple Qs. I actually have a position on a short call spread on in there, but we can go here. I'm gonna show you same type pattern, same type Fibonacci range on the Qs. Looks identical, right? So the next level that I have down on the triple Qs would be right down here around 430. So I still have us going another 10 bucks lower down to 430. Now the expected move for the week on the triple Qs is what? Let's see if it's actually not showing right here, but I can see it in the center. So the expected move on the Qs looks to be about, and I'm just looking at the ruler in the middle, from 447 down to what, 432.50. So it's that about 8 bucks. So it's almost like a $8 move in the Qs in either direction. And so if I'm correct, that'll put us down about what, 432, 432.50, somewhere right in here, basically taking out this low. So that's how I use the expected move to kind of gauge my scalping range. Now, so let's say you say, man, I don't really, that don't matter to me. How does that apply? I guarantee you, I'm willing to bet that when the market gets down, if it goes down here or if it goes up here, I'm willing to bet as traders on either side. That's either once it gets there, they start looking to buy, and if it gets here, they start looking to short on the intraday range. Like you could literally, you can bank on getting a little hold right here in the pull, in either direction once that's hit, and then I can look at the option chain and see what the bulk of the orders are. If you look right here on volume on Friday, 23,000 23,000 options were traded right here at 432. That's larger than all of these right here. If you look down, you look over here, right around 450, you had another 27,000 traded right there. Now I don't know whether they bought or sold, but I know that um there's definitely volume at these stages of the expected move. So we can look for some type of support or resistance in either one of those areas. Now, I'm going to talk about some geopolitical risk as well, just to go along with this market topping or appearing to top. Couple things, we got a lot of stuff coming up this week. We got the eclipse on Monday. So you may say, what does that have to do with trading? There have been studies to, I think, Gann, if I'm not mistaken, I can't remember his first name, but he got a lot of famous indicators. I want to say it's William Gann, but I can't. But anyway, when you look on your indicator list, you'll see that name Gann. If you Google it, he was a type of trader that actually traded and used like moon cycles and sun cycles and stuff like that, like around like his charting. It sound crazy, but just Google it. Just it's some good reading material. Just to, but the reason that's one of the reasons why I talk about the eclipse. And I think 15 states, last I checked, have issued like state of emergencies, right? So whenever you get a market that is like this one, and it's just been going up, 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 similar to right before we had the COVID event, those things like that was a black swan event, and the market just tanked down. But if you were looking at the chart, it was showing signs like, hey, it was starting to slow down. So you have that. So and then they've issued warnings and stuff like that to be wary, maybe try to stay away from large gatherings and stuff like that. So it's something like that could tip the market. Um, I also seen where um, Blinken was talking about admitting Ukraine uh, to NATO, like allowing Ukraine entrance into NATO. So if you've been following that, you know that for Russia, that is basically that's a line like you don't cross. Russia has stated for years that they wanted Ukraine to remain neutral. They do not want them to be a member of NATO. So just so you know, once Ukraine becomes a NATO member and they're in war, whoever they're at war with, NATO is then at that point required under their rules and regulations or their laws to join with Ukraine against that other nation. So Ukraine is currently in conflict with Russia. So that will put all NATO members would then become allies to Ukraine, United States included. That is something that could make the market move, could make it whip. So I would definitely monitor any long positions at this moment. If you have long positions, you need to be able to out in my opinion, like me, I can get out of anything long that I need to get out of, including stuff in my 401k. That's just me. Um, I have a self-directed brokerage. So the minute that crazy stuff start going on, I've already like gotten neutral anyway. sold out of long positions. I'll wait. And if the market start drifting back higher, I just go back in. It's not hard. It's not as hard as they make it seem. But however, so be careful this week and pay attention. I'm gonna pull up a chart of the VIX and I'm gonna show you I still got levels for the VIX to go higher. You say, what does that mean? If the VIX takes out this high, the right here, the next high in the VIX, which is that's we'll call it that's 1692. If we get a move on Monday or Tuesday because it started drifting down, but this level right here held. In order for this to continue, one of the rules says an Elliott wave, like basically this level needs to hold. Uh, this level right here. Now, if it starts to drift back down into here, it could be the end of it, and then the market could drift higher. But if we see the VIX, we get on Monday or Tuesday, like Monday, it could just drift into here, right? And then Tuesday, we see it go boop, and then come up and take out 1692. Once it takes 1692 out, it's gonna take this high out too. So it's gonna get up into here. If that happens, once it breaks here, equities will go lower. We should see the stock market continue to go lower at that point. If you know how to so this is the thing. A lot of people want to wait until it goes lower and then you want to start shorting. You know, me, I like to anticipate the move. So you can because at that point, if you start trying to get short, then options will become more expensive because vol will expand. So a lot of times, like traders want to buy puts once the market starts going down. You're paying up for those puts because the price will go up. It's almost like trying to buy insurance while the house is on fire. You're gonna pay crazy prices. The time you buy insurance is when when everything look like it's fine, right? You want to buy the insurance before you see smoke, so you don't pay a whole lot for the insurance. If you're right now, I'm telling you, the house got a little bit of smoke. The fire ain't started yet. But once it starts, I'm gonna show you another chart. You guys can, from time to time, look at XHB. What is XHB? That's the Home Builders ETF. Look at it. Similar chart pattern. Well, you can't make this up. This looks just like the S&P 500. You almost got like a double top. You had a high, a low, and a high, right? And then it gapped down. So you got this now, this level, this gap right here. You want to see if you're a bear, you want to see this level right here hold. And when it got up into that level, it came back down. You want to see that level hold. If we get another low put in the home builders, and so you'll see the housing markets things concerning that have to do with the housing market, they'll continue to go down. You'll see that stuff decrease. That's a big red. That'll be a big red flag. Another thing to watch. So you want to watch the VIX this week. You want to watch home builders, and you want to watch bonds. When the market rallied on Friday, and I still got stuff up on Friday, you can still see the S&P 500 futures. So it's some called the spools. The spools ended up over 1%. The NASDAQ futures rallied. Dow futures rallied. Russell futures kind of remained flat, but they were green on the day. You know what didn't go up? Bonds. Bonds stayed down a whole percent. The notes were down over 0.5%. Bonds did not rally with the rest of the market, and gold is going crazy right now. So those are factors that you look at, like people buying up gold, like they panicking, right? If the market continues to go up, we should see the bonds begin to turn around. If the bonds continue to sell off and continue to go down, that is not a good sign for the overall market. So we're going to watch bonds. If you're not familiar with watching the futures, watch the TLT, watch the home builders ETF, and watch the VIX. Bonds go down, VIX go higher, equities should follow going down as well. And then at that point, do whatever it is that you know how to do. Um, Premium sellers, you should already be selling, in my opinion. Um, and when I say selling premium, that's not bearish, that's not bullish. It could be neutral because the price of options, that means they have gotten pricier, they have expanded. So when you sell premium, you are basically the insurance seller at that point. That means the option chain is getting wider. So like I actually sold a put in Tesla last week, right around in here. It popped here and I closed it out. I literally held it for like 2 days because when it popped, a little bit of vol came out and I was able to get out before this move happened right here. So you can sell premium and still make bullish trades selling premium. I just wouldn't be a buyer of options at this point unless you know what you're doing. You buying puts, to me, the best put play is to buy them out of the money. You can still get them a little cheaper than buying them at the money. And then it's possible for you to make money if you're right with the when the market goes your direction. So make sure you guys hit the like button, stay tuned. Um, I'm gonna bring commentary pretty much all this week. I got a feeling that this is gonna be one of the weeks where we get a lot of action. So with that being said, guys, I'm gonna be out. Peace.